right, welcome out to tonight's advisory report. It is Wednesday, June 10th, 2026, and we are starting out with our market regime gauges. We've been in a pullback for the last 3, 4, 5, 6 days. Started getting defensive on Friday, and you can see we are still marking the market conditions uncertain. We are still in a bullish intermediate trend and a bearish short-term trend as we can be in playing defense. You can see some of our some of our targets where we have a 59% long target, offensive target for the ultra aggressive, 90% for the aggressive. Moderate aggressive, 69%. All of these are down from where they would be if we were in a clear uptrend. So we are playing a bit of defense. Let's go ahead and look at the intermediate trend. We are still bullish in the intermediate trend, and we'll continue to maintain that way until the price of the S&P 500 breaks the 30-week moving average, which is this orange line. You can see the pullback is starting to get a little significant now, but still bullish. And that's the way that we're going to lean. For now, any kind of pullback that decides to turn back up on strength will be considered a buy signal for our type of management. Let's jump over to the short-term trend. Looking at the S&P 500, we are in the red zone, and anytime the market closes below the 20-day moving average, we'll be in a bearish position for the S&P 500. As you can see here, we are coming near the 50-day moving average. We have a couple levels of support that may come in, thinking that yesterday's low might converge with the 50-day moving average, giving a really good spot for a turn up. We'll see if that's true. That might come to fruition in the next couple days. So we will stay on that. But you can see it's been open, close lower, open, close lower, open, close lower, open, close, lower. So keeping our eye on things. We've been defensive, like I said, all through this area right here. So let's go ahead and look at the intraday today. This is today's action. We'll look down at this lower chart. This is a 5-minute chart, and you can kind of see the market actually started the day on a little bit of strength, probably got some buyers to come in and then roll over, and pretty much was rolling over all day long. Let's go ahead and go over to Market Lens. Let's check out some of the positions that we have in the ultra aggressive account. We still have our SPXS, which is 3 times the bear of the S&P 500. What that means is when the S&P goes down, this thing goes up, and it goes up 3 times the amount. We have a small position in this, considering that it goes up 3 times the amount, and it's roughly covering about 15% of our portfolio as a hedge. But you can see that was up while the market was down. The S&P 500 ended up down 1.62%. So let's go on over to Twilio, which ended up closing green on the day, but still not really the best look, trying to maintain some support in the area. We have a small, we've sold down this position to a very small position, but yet an inside day. So we'll see if that's ready to turn back up. There's a lot of volatility. Dock in, as we can see. A good day yesterday with that green hammer candle. Hammer candle is a day where there was a lot of selling, and then buyers came in and pushed it all the way up to the high area of the day's range. Today tried to break out and got pushed back down as expected, as the market's not really giving much returns. So, but we still have a little small part of that. We have a small part of tech, and still looking like it's wanting to go lower, maybe down to the 50-day itself. And then we have MRVL closing in the lower part of the range of yesterday's range, but still within the overall range. So all those are very, very small positions. You saw our target is less than 60% exposure in the ultra aggressive account. That's what I have for you today. Take care. Have a wonderful afternoon. We'll be right back at it tomorrow.